Good morning, ladies and gentlemen, and Happy New Year. Now, this is the first video I've made after 2 years of break. I was focusing on live trading and other ventures in my life, but I want to get back into the habit of discovering the joy of video making. Today is a special video because you will get to have a sneak peek into the actual morning briefings that I deliver for the members every single day. Morning briefings are designed to help you to get you started day, to translate hardcore economics into actual trading plans. Long story short, this is an annual kickoff morning briefing where I try to recap what happened in December 2023 and also what was the market sentiment when the market opened in 2023. It doesn't cover everything, but it should give you a good insight about where the market is currently heading, what is the market sentiment, and what to expect in terms of monetary policy, in terms of some geopolitics, and mostly fundamentals, because I am a macroeconomic trader. Look into the morning briefing that you're about to see. It's quite extensive, loads of information, quite intimidating sometimes, but this is how you're going to learn. If you're interested to sign up and to get the same level of analysis, then you're welcome to do so. You will find the link below the video. Now, at the time of recording, you can see my open position on the screen right now. So these positions were open before the morning briefing yesterday, but the market hasn't changed that much. So you can see on the MetaTrader screen that these are live accounts. The way to distinguish live account from demo account is that you have a gold or yellow avatar next to the account name. If it's green, that means it's demo. If it's yellow or gold, that means it's a real account. So let's get into it. I hope you enjoy it. If you have any questions, feel free to hit me up. Links and contact details below the video. Thank you so much. This is the Alpha FX. Let's start the morning briefing. Good morning, ladies and gentlemen. Welcome back. Today is 5th of January. Thursday. Is it Friday? Friday. Yes, it's Friday. The first live session of the year and the first and most anticipated data of the whole month, which is the almighty NFP. This week, we have had FOMC meeting minutes. We have had JOLTS job openings. We had ADP non-farm employment. We had initial and counting jobless claims. So quite a data-heavy week. Loads of things are happening on the market, and things are a little bit mixed. FOMC meeting minutes, what do you think about that? Was it dovish or hawkish, or was there any surprise? Let me give you a hint. So the Fed, everyone was betting that the Fed is going to stop with interest rate hikes and actually start cutting as early as January 2024. But I warned everyone that the Fed isn't going to pivot. They're not going to simply just go dovish overnight, because this isn't the way how the Fed works. They're going to push the economy to the very, very, very edge when just about to break, and then they're going to start cutting interest rates. So they won't give any breathing. And from the FOMC meeting minutes this week, actually, that's what the communication was, that yes, it's the end of the rate hiking cycle, but it's not the beginning of the rate cutting cycle. So nothing has changed. We're going on the same story for the past 12 to 18 months. But the first thing of business, new week, new year, new opportunities. Let's start the day by listening into the Bloomberg News for the macroeconomic headlines. And I want you to pick out the most important news which could help us trading NFP today. So when the news starts, listen very carefully. And just a quick sound check. Can you hear the Bloomberg TV?
Yes.
Yes.
Okay, Here we go.
Welcome back to Markets Today. We're 30 minutes from the start of cash equities trading. Here are your top stories. Stocks and futures lose steam as investors await the US jobs report. Signs of a robust labour market weigh on expectations for rate cuts by the Fed. We look ahead to euro area inflation data due this morning for clues on the ECB's rate path after Germany's CPI rose less than expected. Plus, Islamic State says it carried out Wednesday's attack in Iran that killed at least 84 people. Meanwhile, US Secretary of State Anthony Blinken heads US to the Middle East to step up efforts to prevent a broader regional conflict. Welcome back to the programme, everybody. Half an hour then until the start of equity trading here in Europe. European stocks did pretty well yesterday by international comparisons, and certainly compared to the United States, where things were a little more mixed. And so we're expecting a bit of pullback at the start of trade, down around 0.6% on the FTSE 100 futures. Last time we checked in on this, they were all down by the same amount, but now reassuringly there seems to be a little variation, which makes me a little more confident. So that's what we see on Europe. The US equity futures picture looks slightly negative, but not by as much as this, given yesterday.
Okay, so you're listening to the news. Tell me, what's the most important thing today?
So as far I know, by economic calendar, we got the NFP and ISM numbers.
Yes, absolutely. Just for 1 second.
Cycle. She might be heading for the first trip up, though, because she has always argued that the US would be going into recession around the turn of the year. Now, obviously, she said this very far in advance. She was more bullish on the economy throughout the cycle until the end of this year. So you give her a few months leeway. But she is making the point that the US jobs market, by some measures, is already looking like it's pretty much on the verge of recession. And she had a few charts in the piece to do that. I kind of alerted Dan Curtis with almost no notice saying, I want that chart. And he's a complete legend, Dan Curtis, on our charts team, and managed to make a proxy of it within the space of a few minutes. But basically...
Okay, long story short, you can read the narrative on the chart. What does it tell you about the US job market, or labor market, sorry, not job market?
They said about recession.
Yeah, it's a recession, and one of the first signs of a recession is the slowdown of hiring, because as the economy is going into a recession, the first thing that companies, every single company, 99.9% is going to do is they're going to stop hiring because they simply don't have enough money. They stop hiring, they stop investing in projects, they stop investing in research and development, but the hiring, the most expensive cost, the highest cost for every single company on the planet is human labor, simple as that. So as soon as they stop hiring, that is a sign that, okay, they may be running out of cash or they may be getting cautious. But this is actually a good chart and can be useful for us for the upcoming NFP. Now, we listened into the news. There were some geopolitical tensions in Middle East, in Iran, etc. But, you know, that story is kind of like priced into the markets. And every single trader right now is eyeballing the almighty NFP. Can you tell me what is non-farm payroll and why is it important for us traders? Excellent answers.
Good morning, Thomas.
Morning, Marwan.
It's inflationary. If you have it high, that means you have more money in the economy. So
exactly, circular flow of income. So non-farm payroll represents how many jobs been created, how many jobs been taken out outside of farming. And guess what? The US isn't a farming economy. Yes, they do have cornfields and, you know, what you see in the movies, but they make most of the amount of money on something else in other areas of business. Even manufacturing is bigger than farming, I think. So it's a service-based economy, which means that non-farm, so it's service, that's the meaning. And it measures how many jobs been created, how many jobs been taken up. And Marwan said it very well, that because it's a service-based economy and because it's particularly a consumption-based economy, households get salaries being spent in the economy. Now, the more jobs are in an economy, the more households get paid for those jobs, the more money is being spent from the disposable income of the household. That is going to be freaking inflationary. And guess what? The Fed is fighting inflation for how long, Marwan? 18 months? Something about that, 18 months. So they're fighting inflation for 18 months. That means to fight inflation, they need to raise interest rate. But they kind of like stopped with raising interest rate because as you could see from the chart on the Bloomberg TV, the economy, and this was actually, I'm quoting the anchorman, the economy is on the brink of a recession. And I said at the beginning of the stream or the Zoom that the Fed is going to push the economy into the very edge until the recession, and they're going to start cutting interest rates. It always takes, you know, months and sometimes years to tilt the economy into recession. But how can we make money out of this? Can someone tell me? We have NFP today. We know the economy is going into recession. Job market is in a deep shizzle. How can we make money out of this? We're not going to make money?
We read the numbers, man, and we trade the numbers. So if we have NFP is higher than expected, then we will have a push down on gold. So I think for me, it's as simple as that.
Exactly. Marwan is always right. He's never wrong. Follow the freaking numbers. I mean, the smartest people in the whole world, well, allegedly, the one with the highest pedigrees, the Fed, and investment banks, JP Morgan, Morgan Stanley, what they do is look at the charts, they look at the numbers. Okay, we have a biggest fucking economy in the whole world. We have inflation. We have a Federal Reserve Bank who's fighting inflation. So what they do, and what the Fed actually communicated, they're going to look into the data, and they're going to make decision based on data. So it's a data-dependent decision-making. And what they do, and what they mean by doing this, is that they're going to look at the labor market data, which you're in luck because today is NFP, one of the most overhyped labor market data. So what they do, they go to economic calendar. No, they actually get it from the statistics. They go to observe what is the change in the labor market. It fluctuates. People get jobs, people get sacked. There's a natural rate of unemployment where people are in between jobs. So they giving up jobs in hope that they find a better job for a higher salary. That's a natural rate of unemployment. It's always be there. So some sort of unemployment is okay, but too high unemployment causes deflation. Too low unemployment causes inflation. And guess what? The Fed is fighting inflation. So from this equation, what we have to do, look at the non-farm payrolls. Before we look at today's data, how many of you checked out this chart I sent out a few minutes ago?
Every single time, man.
Yeah. This chart,
it's a piece of art.
We thank you. You're a piece of art. So we don't have to go back too far. I mean, I've been following NFP for quite a while, and all the CPI data. You don't have to go back years and years because it's going to be irrelevant. When the fight of inflation started about 2 years ago, that's when you really have to start watching. But you don't even have to go back that far. You just need to look at the last 2, 4, 6, 8 events, for example. And now I want people who hasn't spoken yet to help me to observe, to check this chart. What does it mean? And feel free to ask. I know it's intimidating. I know you don't like to speak, but this is how you're going to develop. If you're going to the edge, you're going to uncomfortable places, that's how you're going to learn. So if anyone has any question about this chart or NFP.
Hi, Thomas. So yesterday, ADP non-farm number was way higher than expected. So shouldn't logically the today's NFP also follow that and have higher number than forecasted?
Not always. I mean, we have to approach NFP and ADP and JOLTS with extra caution, because many times the actual forecast of ADP and JOLTS is way off the chart. It's way off from reality. The same goes for NFP. I mean, did you know that NFP is one of the most, misforecasted or misforecasted numbers out of all of them? It's one of the most difficult to trade. That's why it's overhyped, because there's volatility. In theory, yes, it should follow. ADP and JOLTS is a good indicator for NFP, but it's not 100% accurate. That's the answer. Now, what we see on this chart is the last 8 NFP data prints. Starting off with May 2023, you can see that the actual number was 253,000 versus forecast 180,000. What it means is that the NFP number was higher than the forecast. It was higher than the previous. That means more jobs being created, those jobs paying salaries, those salaries going to disposable income of households, those disposable income of households going to be spent, and that circulation of money is generating inflation. And if it generates inflation, the Fed is going to raise interest rate. Now, the biggest enemy of gold is high interest rate, because gold simply cannot compete with high interest rate, because gold is not an interest-bearing asset, but government bonds are interest-bearing. So all the money flows into fixed income assets, which give you a guaranteed or promised payment, coupon payments, and the face value at the end of maturity. So long story short, all you need to understand is high NFP number is bad for gold. You can see here 253 versus 180, dropped 415 pips. Then it retraced back. What's the lesson here? First one, if NFP is higher than expected, gold's going to drop. Second one is, as soon as you make 100, 200, 300 pips, get the fuck out of the position. it's going to retrace back. 99% of the time, it's going to retrace back. So make the money, take the money. Moving on, next one, June 2023, actual 339 versus 180K, minus 406 pips, boom. And we are on the 8-hour chart. So it was fluctuating, but then it retraced back and it stayed below the initial sell level, but it retraced back and it was moving sideways for a good 2-3 days. I mean, it's actually even longer, 4-5 days. So lesson again, as soon as you make money, get out of the position. Number 3, back in July 2023, actually the NFP number was lower than expected. Surprise, surprise. And what happened here? Because it was lower, that means that the labor market is weakening. Sorry, the job market is weakening because it's unable to suck up all the excess unemployed. So lower NFP number, gold was increasing, but it didn't retrace back until, a couple of weeks. Yeah, 3 weeks. It took 3 weeks to retrace back. So actually the market tend to rally much more at the current environment. When the number is worse, gold tend to hold higher prices for longer. Next one, actual 187. And this was this was the Israel-Hamas conflict. So here, I think something happened. Maybe this was the Jackson Hole meeting, because you can see there's an anomaly that the actual number was lower than the forecast. It went up 221 pips, but then a few hours later, ugly melting. So it wiped out all the profits. So 2 lessons here. The first one, as I said, as soon as you make 100, 200 pips, get out of the position. The second one is always be active, vigilant, because something else happened here. And I think that was a Jackson Hole meeting, but I can't be 100% sure. Next one, higher than expected number. Again, very inflationary. Gold was melting 188 pips, and in total 516. But then again, it came back. So it went down, retraced back, and boom, went down even more. But you cannot be 100% sure the price is going to drop thousands of pips. And remember, this drop was before Hamas attacked Israel. And this was the first time when an inflationary data was ignored by the market. I mean, look at the number. The actual number was double than the forecast. And despite that, gold was shooting up instead of going down. We don't know what happened here, but definitely something is fishy, because the market should not react to this. And again, lower than expected, gold went up, but then it melted again. Of course, we are balls deep into the Israel-Hamas conflict. So the last one, is started to normalize back in December. So I think we can ignore this area right here, because that was the Israel-Hamas conflict, which has led over 3,000 pips increase in gold. But if you look at the last one in December, okay, I want someone to help me. What happened here? What was the actual number?
It was higher.
Thank you, Yanar.
Yeah.
What does the higher NFP number means? It's deflationary, right?
Inflationary.
Inflationary. Well done. Well done. So, Yanar, what happens if the number NFP is inflationary?
It's bad to...
I asked Yanar.
It's bad to gold, and the dollar gets stronger, so the gold going lower.
Why? Can you explain me the reasons behind?
No, I can't.
More jobs being created. It's okay. I'm here to help. Feel free to ask questions. So actual NFP is higher than expected. Means that non-farm payrolls. Payroll means people put into jobs and get paid, right? So if you look at the circular flow of income, this is one of my favorite charts. This is Economics 101. So imagine NFP, jobs being created. So in this particular example, 199, and the forecast was 180. So the actual number of jobs being created in the economy was higher than the forecast. What it means, factories or workplaces pay factor of payments, i.e. salaries for households. So more factor of payments have been paid because more jobs been created. Now, more households have had more disposable income to spend. The more disposable income circulating in the economy, and this is money circulating in the economy. The more money circulating in the economy, the more money is most likely going to spend in the economy. There are ways to withdraw or inject money in the economies. For example, if you spend your money in BMW, which is a foreign car in the US, most of the profit is going to go back to Germany. but we ignore that. We're focusing on that the more salaries are being paid, the more money is circulating in the economy. The more money is circulating in the economy, the higher inflation is going to be, because money fuels inflation, especially in the US economy, where consumption accounts for about 60 to 70% of the national GDP. And the more money is being spent, of course, GDP is going to be greater, but greater GDP is going to mean the more inflation. Do you follow me, Yanar?
Yes, I do.
Okay. Do you have any questions? So this is it. And now we arrived to our newest NFP. So the first thing we always do, talk about macroeconomics, which we did. We know that the market expectation is quite bearish after the FOMC meeting minutes, which signaled no rate cuts for the foreseeable future, short term. Then we look at the fundamentals, which is going to be NFP. We discussed the technicalities and the theoretical part of NFP. Now let's look at the actual NFP we are facing today. So what is the forecasted number of NFP?
170.
What was the previous one?
199.
Was the previous one revised for any reason? Was the previous NFP revised?
150?
No, 199, so it wasn't revised. The 150 was the one before in November. These numbers do get revised, so you have to pay attention whether the numbers get revised, because that's going to affect the market. Does or is the 170K forecast versus 199 inflationary or deflationary?
Deflationary.
Deflationary. If the number is deflationary, which direction gold should go? So now just for a second, I'm going to delete it. Let's imagine that the market is going to print 170K. 170? Yeah, 170K. Yes, gold is going to go up. Absolutely. So this is the first scenario. Gold is bouncing on the pivot. So what could do is go back to 2000, let's call it 2068. The forecast is accurate. But if the forecast is way off, and if the forecast is, well, the actual is greater than the forecast and greater than the previous, let's say the US economy is printing 200,000. What's the scenario there? That's inflationary, right?
Yeah.
And when the number is inflationary, that's the biggest enemy for gold. So the market is going to melt. The gold market is going to melt. So pretty much this is the two scenario you need to understand. The lower the number, the higher gold gets. The higher the number, the lower gold gets. Simple as that. You need to follow. Any questions so far?
Yes, Thomas, just a quick one. Yesterday's numbers for the unemployment were lower.
Mm-hmm.
So that means logically the payroll should be also higher, don't you think? Logically.
For the continuing jobless claims, right? And the initial.
Yeah.
Mm-hmm. Yes, it was lower.
All three data were in inflationary. Sorry, inflation.
Yeah, so initial and jobless claims was lower than expected, which
is even though the consensus were higher, so it came again contrary to it. So maybe that supports the bearish scenario.
So these numbers, less people claiming unemployment benefits, which is inflationary. And yes, this is a bearish scenario for gold. So gold should have gone down. But we also have ADP non-farm employment, which was actually higher. So that was inflationary as well, right? So that is an extra confirmation that gold should have gone down. But did gold actually go down that much?
No.
Gold went down, I think about 120 pips, 100 and something pips. Yeah, and now it just reverted back to the pivot. So what could be the reason for this?
Maybe
I think everyone is waiting for NFP and
yeah, maybe more positions on a higher level for set.
Yeah, both of them is correct observation. Everyone is waiting for NFP. Remember that this is the first week of 2024. I know you've been trading even weekends and everything, but many of the people hasn't returned into the offices, and they won't return until next week because it's school holiday. And guess what? Many of the people work in finance, they have kids, and they're not going back to work. So there's every major bank and firm is operating half capacity. So this could be the reason that you haven't seen those big movements so far this week, but volume should return, with today, I guess, but definitely from next week. So we discussed the potential of the probable scenarios and everything. Front running, to be honest, my opinion, if Marwan already mentioned very important things, ADP and initial and continuing jobless claims, in my opinion, I would bet that the market is going to continue lower. For first reason is that the data Marwan just mentioned, and this is actual hard data which was released this week. The second thing is the FOMC meeting minutes, where Jay Powell and the members of FOMC confirmed that they, yes, fighting against inflation going well, but it's not the end of the war, and they're going to hold interest rates as long as necessary. And yeah, these are the two most important things: data and communication from the Fed. The forecast, well, if you look at the NFP forecast, is actually showing a deflationary data. So this should be bullish for gold. But, you know, sometimes you got to risk it to get the biscuit. NFP is one of the most misforecasted data. So I'm still holding the sell positions. And how do I put it back? I think it was something like this.
Yeah, also, if I may, Thomas, if you look at the chart technically now, if you want to talk technically, if you take the 4 hours chart or the 2 hours, 4 hours is a bit clearer. It's very, very clear now that we were in a bullish trend, and then we had a breakdown and then retest, as you were showing. And since then, we have a continuation down, then a retracement, couple of candles, and then going down again. Retracement and going down again. And the retracement is always being at the 50%, almost 50% retracement. So now we're at the 50% retracement, if you look at it. So I'm also on a sell.
Bang on 50%.
Yeah. So that level is critical. I have my stop loss around 1954. It's small positions, but higher stop loss. Just above the. I shared a chart yesterday. My stop loss is around 2054, around 66.7%.
60. What was the number per price?
2054.262. That was my.
Yeah, it's lower than mine. Again, we're going into the same direction, brother. Hopefully, gold is going to continue lower.
So
that said,
we have both technical and fundamental supporting the downtrend. But as you said, we need to look at the numbers. So the NFP is, and even the Fed mentioned it several times that they always look at the NFP. Or they consider the NFP, as you said.
Yeah. So we have the magic free sum, macro, fundamentals, and technicals pointing into the same direction. And who doesn't like a good free sum? Gold should continue lower. Now, thank you so much, Marwan. Yeah, I can't comment anything. He's just fucking brilliant. And, you know, he's saying the same thing as I do. A word of caution,
learned from
guys.
the best, Thomas.
Who's that?
Of course, Thomas. Come on.
Thank you. A word of caution, guys, that those who hasn't traded NFP before, it can be ugly. And what's most likely is the price is going to range in between 2050 and 2036. So it's 140 pip range. It can be ugly. You never traded NFP. Be careful. Don't go anything crazy. Anything is possible. So this analysis is not bulletproof. It's not guaranteed for anything. You should make your own analysis. And if it lines up, just take the position on your own will. Any questions?
How are you doing, man?
No.
Yeah, very good. Thank you so much. Dry New Year's Eve, no alcohol, you know, focusing on my health, but doing very, very well. And sitting in some gold sell positions still since yesterday. I've seen many people were jumping in and out, but, you know, you shouldn't. Anyway, thank you so much, guys. We just reached the end of the morning briefing. I wish you good luck. Quick question. Do you want a live session for NFP?
Yes, please. We do.
All right. See you. How about we meet about 30, 40 minutes before NFP, and we look at the market, and then just trade this motherfucker. Thank you so much, guys. See you later.
Thank you, Thomas.
Thank you, Thomas. Thank you.
Thank you.
Thank you, Thomas.